This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and this is the weekend's deep dive. On the weekend, we like to come back and re-examine the base case hypothesis of the channel and check to see if everything is still going according to expectations. If it is, then I can continue to have confidence in my positioning and in my posturing. And if not, then of course I want to know in the first instance so that I can adjust to an ever-changing data set. Today, I'm going to run through this thing from the top as always, but I want to spend a little bit of time talking about something that I found that I believe the market will incorrectly interpret as positive. I believe what I have found has ominous implications, and I say that based on my experience in markets and my pattern recognition that has been developed from being in markets as long as I have been in them. So I'm going to put the tinfoil hat on today for a little while. I'm going to talk you through what I am seeing, why I have seen the same pattern over and over and over again. It's very subtle, but if your mind is wired a little loose like mine is, then you should be able to see what I'm about to show you is going to be incorrectly interpreted by the masses, and it is the few that are going to be able to read between the lines here. So I'm excited to show you that. As ever, we'll run through this thing from the top. Starting with the stock market, the base case was at the lows we were too bearish. We'd have a blow off top to all-time highs, come tumbling down in a global recession, and here's the key part, this would have a deflationary component to it. Fast forward to today, and I believe we are about to set a blow-off top angle here. And of course, as we have done the whole way up this bull market, we will use that trend line violation and confirmation via failed daily cycles to get us out into what will be at least a local top like the prior ones here and here, or in the worst case scenario, it will get us out at the top before we enter that global bear market and recession. This trend line is not yet set. I'm waiting for a daily cycle low and then we'll set it for real. But I do believe we are now in that final blow off top portion. I believe that we're going to go pretty much near vertical from here for a little while longer, and then it's going to be finally time to come tumbling down. I actually think it'll end up looking something like this, but time will tell. For Bitcoin, the base case was pretty simple, right? It was that we're going to get a weekly cycle low. We're going to, roughly speaking, see a double to 150k plus off of that low, and then the question becomes, do we get one final weekly cycle low and another pop, or is that the ultimate top? I'm going to be using this to relieve some pressure. I'm going to be selling some spot here for the first time at the top of this weekly cycle since the allocation at the lows. All of this has been done publicly by my long-term followers. They'll attest to watching me stay on trend, but I have to get to this area here and take at least some profit to relieve the pressure just in case this ends up being the ultimate top. I will keep the remainder of the stack ready to see a weekly cycle low and double just in case we've got that. For an updated look at this chart, I think the prior few weeks of consolidation really ran down a lot of people. I think it really wore them out, but it's pretty obvious to me, at least at this point, that it seems like we've begun the next leg up towards the top of this weekly cycle. Then, as I said, we'll be looking at unload a little bit of spot here just to relieve the pressure, just to make sure that I have enough profit booked to be able to keep my emotions and psyche in check, ready for that next weekly cycle low and double. Once that weekly cycle low's in, it will become hard invalidation. At the moment, that's this weekly cycle, meaning we should be able to draw a line under wherever this weekly cycle low forms and use that as the exit the markets in its totality line. And hopefully we can get another push and sell much higher up. But as ever, right, we'll take it one day at a time. For now, this market is still phenomenally doubted. As far as I can tell, a lot of people don't seem happy with the performance. A lot of people didn't really believe that this pop was coming. A lot of people had seemingly given up on Bitcoin. But if we look at it from the profile of the weekly cycles, things are still going exactly according to plan. So happy days, right, for the stock market, for Bitcoin. Long and strong for a while longer. We should be about to get into that real banana zone. Everything should be starting to go parabolic pretty soon, near vertical for a few months. And then, of course, it will be time to book the profits, get out the way, and target those major 4-year cycle lows. As I said at the start, when this thing comes tumbling down, I expect us to enter a short period of asset price deflation, and that's because the Fed is behind the curve. Now, I'm not going to get into that tinfoil hat bit just yet, but it is coming, okay? So for a long time, I've been making the case that investors have a terribly bad habit of zooming in at the hard right edge and drawing false conclusions like, there we go, resumption of inflation, inflation is sticky, and all that kind of stuff. My bread in the supermarket's not going down. But the reality is, okay, this is yet another lower high, and the disinflationary trend is still very much intact. I believe this is going to continue to come down. It's going to start to head towards that short period of asset price deflation, and that is because the Fed is ultimately very far behind the inflationary curve. The Fed should have been cutting rates a lot longer ago than it has been, and as a result, okay, the Fed is not going to be able to catch up with this disinflationary trend. We know the data has been supporting it up to this point. We have got another CPI print due on the 15th in this coming week. I wouldn't be surprised if the upcoming CPI print is slightly hot because of this counter trend bounce. I think the market will shrug that off. Yes, it has to head for a daily cycle low, and we know that we're getting close to the window here, as we can see from the indicator. Okay, so it only makes sense that we're going to get a daily cycle low, a bit of a hot inflation print, just while we price in this little bit of counter trend wobble. The market will cheer on sticky inflation like it always does and say, oh, that's the top in the market. And then we'll do what we always do, okay, which is find a daily cycle low and continue to push from there. I, of course, expect that daily cycle low to, number one, become the area on the chart where we set the next angle of attack. And number two, I expect that to be an area where I increase my overall exposure to the stock market. But make no mistake about it, this disinflationary trend is going to continue because anything you do to the M2 rate of change shows up in the CPI with a lag, okay? This part of the M2 rate of change has yet to manifest in the CPI. So I still think we're going to get that. For an updated look at this chart, okay, you can see that this just hasn't shown up yet, okay? And especially with the Fed being overly restrictive, especially with the Fed being so far behind the inflationary curve, okay, this is going to occur in the not too distant future. So I'm going to continue to tick this one off and say that we are well on top of the inflation call. Of course, if we're going to have a recession, we'd expect to see labor market deterioration. Last weekend at the weekend's deep dive was one of the first times that we had seen some marginal improvements in the data sets for unemployment in a long time. Now, under the hood, okay, we still have this recessionary signals. We still have this looking like unemployment is about to explode higher, despite the last print dropping from 4.3% unemployment rate to 4.1. Again, when we zoom in here, we need to see back-to-back persistent improvements before we can actually invalidate this setup. Now, of course, we're all cheering this on. Nobody is cheering on people to lose their jobs and their homes and have a big global recession. But the reality is the improvement that we've seen is very nominal at this stage, okay? And it will need to persist if we are going to invalidate the idea of getting a big pop in unemployment, which of course is synonymous with recessions. All of that applies to the U6 chart. Okay, this has made marginal improvements as well, but at the moment it still looks like a lead in before an accelerative pop, again synonymous with all recessions. And the same is true of the SAM recession rule. Once we made the first lower low and have the first makings here potentially of a rollover and an improvement in this data set, this is not enough to say, okay, there's no chance that we're going to get one of these pops, again synonymous with all financially stressed conditions. We also know that the Fed is going to continue to remain paused at July's meeting. Again, this is extremely overly restrictive given how disinflationary the trend is. It's also extremely overly restricted given that we have not yet seen anywhere near the amount of labour market improvement that we would need to see to start to breathe a sigh of relief and say that we can happily swerve a recession. And whilst I still think, like I said, we're going to have insane gains over the coming months as we enter the final blow-off top portions of these rallies, as we approach the tops of these 4-year cycles for the likes of Bitcoin, for the likes of the stock market, and for the likes of gold, parabolas tend to violate spectacularly to the downside when they do. So I think the writing is on the wall here. And this brings me on to some pattern recognition and some spidey senses that I immediately identified upon seeing this. I've seen this dozens of times before in my career, and therefore I wanted to share this with you. First of all, Powell is allegedly considering resigning as the Fed chair. Now, I think the market will take one of two approaches to this. They will either say that this is fantastic and he can leave and we can get some new guy in that will happily slash rates and then we can all have a party because we'll be back towards ZERP and it will be good times. It'll be like the original Trump pump from his first term as president. And I think people will, widely speaking, interpret this as a fantastic piece of positive and bullish news. I think the second set of people will interpret this as Trump is making everything better again, right? As Trump has booted this man out of the Fed and going to replace him with someone that will happily slash rates to zero, and they will be cheering on their pseudo-father figure to make everything better again and come and save the world. But I think what's actually happening here, and I have seen this dozens of times with dozens of these talking heads and figures, is Powell has come in and he has done what he was supposed to do, right? They are given a role to play, they play their role, they complete their job, and then they bow out and leave, having completed their mission. And I believe that's what this is, and this is why I think it's ominous. They don't like to stand these people up on the front of stage in front of the world and say things like, we want to be data dependent, we're worried about inflation ticking up, we don't feel monetary policy is overly restrictive, we're in no rush to cut interest rates, only to have him show up the following month and do a 180-degree pivot on this. They don't like to see these people flip-flop, even though it would be totally reasonable and rational from my perspective to see him stand on the stage and say something like, okay, we were being all of these things, we were concerned about inflation, but actually we think we've been overly restrictive and therefore we want to make a precautionary cut.
and then reassess next month. Even though that would be perfectly normal and reasonable and rational to me, and probably to a lot of you as well, the masses in aggregate view this kind of flip-flopping as a man that is not in control, okay, as a lack of authority in their figure. And so again, and I maintain that this is where the tinfoil hat comes into play, okay, I maintain that they are setting up this controlled demolition, and this to me just signals that this man's job is done. There is now no stopping the controlled demolition. His job was to come in, print a bunch of money, convince everyone that inflation was transitory, okay, then deliberately be overly restrictive for way too long until such time as there was no stopping this controlled demolition. And now this man can bow out. Like I said, the masses in aggregate can either cheer on him leaving and welcoming the new guy that's going to cut rates, or they can continue to support their current president and say that that man is responsible for this guy who works for a private entity, doesn't answer to anyone, has been booted out of the Fed chair position, and that Trump is going to make everything better again. And then when the new guy's in, here's the key detail, okay? The masses will continue to be divided and conquered. The masses will continue to argue over things that don't matter. The masses will forever argue as to whether or not it was Powell that was overly restrictive and should have cut rates sooner, or when this whole thing comes tumbling down in the controlled demolition that the new guy slashed rates too quickly. And the masses will be missing the point completely, which is that all of these talking heads and figures are part of the same team. They're all working on the same mission. And whilst the masses cheer on getting rid of this guy, cheer on their new president for booting him out, even though he couldn't possibly do that if he wanted to, and they cheer on the new guy for slashing rates to ZERP, this guy actually leaving, as far as I can tell, and I've seen this dozens of times before, is a signal that he has completed his job. He's done his job, and now he can walk away, have plausible deniability. They don't have to show any weakness by having this guy flip-flop 180 degrees and start to change his tone. And by putting the new guy in place, okay, we can permanently create that argument for the masses as to who we can blame this on. Was it Powell? Was it the new guy? And the whole time we argue over these silly things, we miss the point in its totality, which is that they're all part of the same framework. They're all working on the same mission, and that is to engineer a controlled demolition, print a record amount of money, create an even bigger wealth divide, double the interest rates to the peak of where they've been, only to then use this huge wealth divide to get the masses to cheer on the rollout of a solution, and that solution will of course be the CBDCs and the tyrannical-like control that comes with it. So I caution everyone from cheering on this guy's exit, from welcoming in the new guy. I caution everyone from falling for the trap of thinking that this is all the president's doing and he had some kind of influence over this. This is really a signal to the world that this man's job is done. This is phase 1 completed, and we are now about to move into phase 2. Now, of course, it doesn't mean in the short term things aren't extremely bullish. They are, okay? I believe we're in those blow-off tops. We've got the high-yield credit spreads trading back below the breakout level, okay? So all the while we're under here, there's no sign of financially stressed conditions. But when these blow-off tops come tumbling down, expect these high-yield credit spreads to break out and hugely pop to the upside, and expect us to use that as a tool to identify that that top is the actual top of this 4-decade-long bull market. We also know that under the hood, okay, there are plenty of mortgage defaults going on and auto loan delinquencies, credit card delinquencies for banks outside of the top 100, because we've created a have and a have-not economy off the back of the C19 printing and interest rate hikes and keeping that interest rates overly restrictive for as long as we have. Under the hood, those kinds of things are all at, approaching, or above the levels seen in the GFC. So again, the writing is going to have been on the wall for a long time when this parabolic blow-off top eventually violates spectacularly to the downside. The last thing we normally check in on these weekends deep dives is the yield curves. Remember, it is the acceleration to the upside that's synonymous with the tops coming in, not the inversion and not the reversions. For the US 10-year minus the US 2-year yield curve, you can see that this thing continues to trade sideways, as we say every week, sideways or down, conducive to big blow-off top moves. It is the pop to the upside, the accelerative sweeps, okay, that are synonymous with recessions. And we can see that here. Here's the GFC, here's the dot-com bubble, here's the C19 era. So all the while we haven't made a sweep to the upside, then we can continue to be bullish biased here and hold on to the positions that we've got. We can sharpen this thing to the 10-year 3-month yield spread. Again, the same principles apply, okay? It's the accelerative sweeps like we saw in the dot-com, the GFC, and the C19 era that are synonymous with tops coming in for the market. What do we have here? Okay, continues to be range bound for a number of weeks. Again, sideways, okay, down, okay, pop to the upside, expect that to coincide with major tops after these parabolic blow-off tops complete their near vertical moves to the upside over the coming few months. So we're getting later and later in these longer term cycles, later and later in these 4-year cycles, and with every day that passes, I expect us to be more and more bullish up until we actually come tumbling down, and then it'll be time to head and target for those 4-year cycle lows in late 2026. But now though, okay, we know that we are approaching that daily cycle low as I showed you earlier, so expect a bit of a pullback, maybe catalyzed or attributed to the slightly hot CPI print this week, just as a result of this counter trend wobble here, and then we can resume our disinflationary trend. As ever though, it'll be business as usual, okay? Wait for the daily cycle low, use that to set our angle of attack here, add a position, move the stops up, double the exposure, keep the risk the same. We'll declare the stop loss public as we always do. We'll call the trades out ahead of time as we always do on this channel, and we will continue to capture the rest of this blow off top moment in the stock market. If you're a level 3 member, there's a VIX trade coming up this week, I would think, so look out for that. I'll make a members only video after this as always. Gold as well, still holding its daily cycle low, still pushing up, and notice how silver is taking the lead here. We are exposed to this by the SILJ to extract more beta. Notice the camel indicator has picked this as the weekly cycle low, so if that's all it took to reset the weekly cycle, expect this thing to be even more bullish than I was anticipating. Bitcoin continuing to moon higher, isn't it? And again, once we've got another cycle low, we can start to set these third and final blow off top angles, and then hopefully by the time we get to the weekly cycle, we can snatch the weekly cycle in here for the third angle, and then look for a fourth to come out of that weekly cycle low thereafter, just like we did with the MicroStrategy trade. Speaking of MicroStrategy, a bunch of these crypto stocks that we've been buying and trading in the short and the long-term accounts in the level 3 member section are now starting to push up significantly. There's another one here with Riot as well doing extremely well. So I think this move is absolutely for real. I think we're in the final banana zone portion of this rally, and I think that it's soon going to be time to start unwinding the major spot positions. It's soon going to be time to start nailing down some gains and putting our focus actually on those 4-year cycle lows of next year. Even things like XRP are starting to pop, and I mean, that's to be expected, but it also, in my humble opinion, is a signal that we are closer to the end of this bull phase than we are to the start. So as ever, we'll keep taking this thing one day at a time. If you're a level 3 member, look out for the members only video I'm going to post for you guys. In summary, I think we're in that final blow off top moment, right? I think the stocks, Bitcoin, gold, I think everything is going to rip higher, but of course, the more vertical it goes, the more likely it is to violate spectacularly to the downside. When it does, okay, we're going to be well on our way to deflation by that time. The labor market deterioration, it could always improve. I hope it does, but I just don't think that's the smart bet right now. So I'm going to continue to stand with this base case hypothesis. We're going to continue to use those warning alarm signs, such as the high yield credit spreads, the yield curves, and track those kind of things along with the trend line violations and the failed daily cycles. All of that will give us a holistic picture for when to stay in the trades and when to exit the markets. And in the meantime, I think it's just a case of keeping the risk managed, doing the basics right, taking it one day at a time. And again, if you're a level 3 member, then look out for some more trades, because I'm going to continue to stack more and more exposure over the coming weeks as we extract the final leg of this parabola across the board. So other than that, have a fantastic weekend. I wish you all well, and until next time, God bless. Cheers. Bye.
Camel finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel